So today I want you to take a look at something. It's called bank runs. What does that essentially mean? There was an article about many banks that they say are at risk of having bank runs, and how would that affect you? That's what we're going to talk about. 3 days a week, I do what I call the dollar is dead. We talk about interest rates, what's going on with the economy, how you can get out of debt, and all the other videos I put out during the week or weekends are to help you get out of debt and show the various methods. I do whiteboards, we have calculators, you name it. But Monday, Wednesday, Friday, we're talking about things that you need to be aware of. Potential upcoming recessions, if you happen to lose your job, make sure you've got an emergency fund, things like that. But what about this article when they talk about bank runs, and what does that really mean? Okay, essentially what it means is banks, when you deposit money, right, no matter you and whoever else it is, let's say there's only one bank. It's not a big bank, it's just one bank. It's a community bank. People put their money in. Let's say in that community they put in a total of, make up a number, $10 million. The bank, because they loan out money and they do other things, they don't actually have the $10 million. So if everyone showed up and said, give us our money back, they couldn't do it. Okay, that's what it means. That typically doesn't happen. It has happened recently within the last couple of years to a huge bank, and it went under and they sold the assets to another bank, blah, blah, blah. But one thing that happens is if you have up to $250,000, it's federally insured. Usually those checking accounts or savings accounts, make sure the bank is federally insured, but they're insured. Okay. But what about money over that? So the reason that they're saying some of these banks are at risk of bank runs is because when there's a recession or bad economic times, people that have a significant amount of money in a bank, well, it's not insured by the FDIC. So if they believe, the individual that has, let's say, $2 million in a bank account, there's other ways they can insure. They can open multiple accounts, but let's just say, because you'll see on this list here, actually let me show it to you now. This list here, as it goes down, shows you what percentage of their deposits are not insured. It can be a significant amount. It starts at 100% at this bank and it goes down. That's a lot. Okay, so that means if individuals who have money in these banks and it's not insured believe that there's bad times or believe that that bank may have issues, they could go ask to take their money out or move it somewhere else. Let's say, for example, you've probably seen that the real estate market, most people, I shouldn't say most, some people believe it's in a bubble, meaning prices are higher than they should be. They're inflated because the government gave out money and they lowered interest rates and all these things. I believe the real estate is in a bubble. That's individual or personal real estate. But then there's commercial real estate. And from what I've read, that is in a very dire situation because so many people went home during the pandemic, that sort of thing. The work from home, less people in office buildings, they're not being occupied, they're not able to pay their bills, they're going down in value, and some people are walking away, meaning the owner of the building just says, I'm not going to pay it anymore, bye-bye, and then the bank has to take it over. So some banks have huge exposure to commercial loans. For example, so if someone says, well, oh my gosh, this bank looks like it might have problems because of whatever, commercial real estate, because of delinquencies on credit card are going up, people aren't paying their credit cards, so these banks have to start writing off things, and all of a sudden they get worried. So now the people come and they say, give us our money back. That's a bank run. If they all say give it back and the bank can't give it all back, the bank goes essentially out of business. So you might want to keep an eye on this and consider not holding dollars. Every Friday we talk about having dollars, but just for emergency fund and paying your immediate bills. But as the wealthy do, they own real estate. That's not dollars. That's a piece of real estate. They own gold and silver. It's not dollars. It's gold and silver. It can go up even when the value of the dollar goes down because of inflation or other things. They might have equities, stock. They might have crypto. They might just have funds of equities like an S&P 500 fund, something like that. So in other words, be careful of having all of your money, a significant amount of cash, sitting in a bank. Now, what are the odds of something like this happening? Well, like I said, it did happen recently, and it should be insured, but wouldn't you rather not have to deal with that? So just be aware and keep your eye on things. When they start talking about maybe banks having issues, you can look up on a chart like this, you can look online to see where your bank is, and you may want to consider alternatives, if not spreading it among multiple banks, or turning it into something like gold or silver if you don't need it in the near term. Hope that was helpful. I hope these videos help open your eyes to things other than holding dollars. Have a great day.